What insight do you gain from your values that form the sense of your legacy? Welcome this morning to the Design Your Legacy podcast. My name is Angelina Carleton, and I'm the host of this series, as well as the founder to Legacy Planning, a boutique coaching and advisory firm based out of Beverly Hills, but international in those I coach. This morning, I have the pleasure of introducing you to Nicholas Mitsakos. He is an investor, an entrepreneur, an author, as well as a lecturer. As the CEO of Arcadia Capital Group, he manages Arcadia's proprietary algorithmic investment fund. He has also written 2 books on investment principles, strategies, and cross-disciplinary thinking. Welcome, Nicholas.
Thank you very much, Angelina. Thank you for having me.
So would you share a little bit more with the listeners or the viewers about yourself and your background, and then we'll jump into the first question.
Well, sure. I'm happy to do that. Born and raised in New York, which anyone who is a New Yorker defines themselves as a New Yorker first and foremost, and then everything else is just some minor detail behind that. But raised in New York, and then have lived in Boston, and actually, I think looking at my background, I've lived in multiple cities and multiple countries, and that sort of informs my perspective as well. Currently, I live in San Francisco and am managing, my investment company. I also, again, I've written a few books and I write articles fairly regularly, and I also am a guest lecturer and perhaps more intensely a lecturer next year. We'll see, depending on how the interviews go, quite honestly. But I've been teaching most of my life as well.
Wonderful. And I think you have a few degrees from Harvard.
Yeah, I did. I have from the Kennedy School and from the Harvard Business School, as well as from MIT in computer science.
Lovely. Yes. So we're going to talk about investments this morning, Wall Street, as well as digital assets, cryptocurrency. So let's dive right in. Okay. So would you say that the existing market is a mirror of human emotions?
Right. I really believe very strongly in this, that, there's no way to escape human emotion when it comes to the movement of markets. Right. And I love the fact that, while people have won Nobel Prizes talking about efficient markets, there's no such thing. Right. Because they say, well, all information exists. So therefore, all decisions are rational. Everyone agrees on the information that exists. So therefore, everyone would make the same decision. Obviously, that's foolish, because any investment, by the way, is a prediction of the future. And the future is unknown, regardless of whatever inputs you have. You don't know, we'll call it the X factors that go into really impacting value. And, for instance, who would have known that in 1997, Steve Jobs would have come into Apple, which was almost bankrupt, and would have created all that he created. I mean, that's unpredictable, right?
Yes.
So therefore, emotion drives that, unpredictability drives that. And, Nassim Taleb, the great author, when he talks about uncertainty and black swan events, but, more importantly, fooled by randomness, right? Things happen and you somehow think you can find the causality, but, usually not, right? So, and there's one thing that, John Maynard Keynes, another guy that I'm certainly a fan of, and he talked about, the market will stay irrational longer than you can stay liquid. And, the market stays rather irrational, right? And we've got all sorts of evidence for that, but I fundamentally believe that you have to understand that, again, my punchline here is price, value, whatever you want to call it, is supply and demand. Demand is driven by human emotions. Supply is driven by many other factors, and we're experiencing some of those factors now, right? So it's come into high relief, but eventually people want something, then they don't want something. Right. So what's the price of something when no one wants to buy it? Well, we know what that is, right? So
yes, I want to just highlight for a moment before I move on to the next question, one of the insights that you shared, which is, as an investor who does this day in and day out, you can't really listen to CNBC, mainstream media, the talking heads, or Jim Cramer, for instance. And that's nothing against Jim Cramer, but rather being able to stay in the market, even if your emotions are all over the place or your stomach drops to the floor. Would you speak into that experience for a moment? Because I think people, unless they're in the market, they buy into the hype.
Right. I think something that I summarize as, the signal versus the noise, right? There's a lot of noise, and it's very easy for a talking head. And right now I'm a talking head, right? To just come out and say, gee, this is great. That's great. That's great. But there are no consequences for that. I have, great respect for someone who has skin in the game. Right? Like, I wrote a check for this, right? And let's see how I do, right? That's important. Right? And one of the things, and I call them, the Twitter knuckleheads, and, kind of the infamous meme stuff, the red clowns, just to be very harsh, they just sort of hype something up, but they don't really know what they're talking about. They just say things, right? And so even, on CNBC, they just say a lot of things without making a point, right? There's nobody that's going to say, buy these 10 things. Let's see how they do in a year. Like that just doesn't exist, right? And so there's no accountability. And so anytime there's no accountability, I would say stop listening, right?
Yeah. Yes. Well, I think it's interesting also, I think that this conversation will give insight into your role as a chief executive officer of a fund to understand the day in, the day out, what it is you think, what it is because I think that these conversations are important to get past, the image and the website, because there's a real human behind that.
Right. And I think, and that's another thing that's very important. I think that, I've had some lucky experiences in my days. And one of them was I was on a board of directors with someone who worked directly for Steve Jobs for 15 years. And one of the things that the real insight is that it's never an individual, it's a team, and it's a collaborative team, and it's the exchanging of ideas. And a great idea comes from any source and should be considered, right? And so, this is where one of the big mistakes that we see is, hierarchy tends to matter when it comes to quality of idea. It doesn't, right? And so a team that can really, assess and understand and take things, one of the things I emphasize, and in fact, it was the first chapter of my first book, was assume no knowledge, right? You have to approach everything, which is, I really don't know what's going on, right? And obviously great scientists and great innovators have all approached it the same way. It's like, I really don't understand. Let's start new. Let's start with, assuming no knowledge. I call it, the blank sheet of paper, because you don't have any legacy or bias. You can be creative. And at the end of the day, it's creativity that creates value, right? There's
Yes.
a direct relationship.
And I just want to interrupt for a moment. You had said in one of your previous podcasts, you were talking about challenge first principles. And I got a kick out of the fact that Galileo had to agree with the Pope, even if he really didn't.
Right. And I got a lot of joy out of, I call, it still moves, right? Which was Galileo's comment as he's leaving the church or wherever he was, where the Pope had sort of admonished him, and he sort of, got down on his knee and said, oh, by the way, I was mistaken. Because at the end of the day, he said, it still moves. Whatever you think, it doesn't matter. This is what's happening. And I think that that's insightful because, the thing, and by the way, there's a couple things to talk about, which I love on that Galileo story. But, one of the things is regardless of what people are saying and what they're screaming about, it doesn't change the way things are actually developing, right? And so the thing to really understand is, just as I keep saying, well, what's really going on? What's really happening? And one of the other things that I sort of used this trick, I used kind of the Ptolemaic method, right? Just now, let's go back to astronomy. Right. So the Ptolemaic method was assuming that the Earth was the center. And if the Earth is the center, as you make more and more observations, you realize this has to get very complex in order for any of this to make sense. And it was just defying logic. And I actually printed a chart of this thing, which is just mind-boggling and complex. Then you have to step back and go, this can't make sense, right? And so then it was actually, Copernicus would kind of look at that and said, that makes no sense. If you look at this, heliocentric model, and that's the same thing that I apply, let's say, to the investment world itself. It's like, well, what makes sense? What is really kind of driving value? Where can we capture it, uncover it? And more importantly, like, to say that I'm going to predict how the market will cycle. No, you're not. And if you try to do that, you're almost bound for failure, because there's nobody today who 20 years ago said, I can predict market cycles and I'm still in business, right? And so the thing to do is to know that that's going to happen, and then set up a strategy that says, well, either way it goes, we'll profit, right? So again, this is kind of that anti-fragile approach, which is we really don't care where things go. We know we'll make money. But underneath that, there's something that's very steady and very predictable. And we know that that's a foundation. So we have very little downside. But when the market moves and things, we make money. And I like that. I, sort of obsess about risk. And I think that's one thing, to touch on, Angelina, is, no company is sustainable unless you manage risk. I don't care what business you're in. Right?
Yes. So I'm going to get into non-fungible tokens in a moment and digital assets, but I want to first go back just to kind of paint the scene and the landscape. You once said that the marketplace is the judge, and I just want to take kind of a broader view, and then we'll narrow it in. So what did you mean, and would you elaborate?
Yeah, and at the end of the day, right, no matter what somebody says, there's an outcome that is determined by many, many interactions, and ultimately kind of reality floats to the surface. The economy is you and I exchanging a good or service times a trillion, But at the end of the day, it's just that, right? And so then ultimately, when you have a trillion, just a big number, right, interacting, you really kind of find out where, real value is or where real trends are. And, a short-term trend with a little bit of a spike and somebody giving a cute speech and people reacting to it, well, that's not what's really going on, right? That's a little bit of that noise. And, one of the things an analogy I really like to use is that of a chess game. So if you think about it, you start a chess game, you have perfect knowledge. This is the exemplary efficient market, because I know what every piece can do and there's no move you can make that I don't see, right? So I always have perfect knowledge. You always have perfect knowledge. But if you were Gary Kasparov, you're going to beat me. Why is that, right? Because there's a sense you understand what's really going on better than I do. And so you understand the signal, I'm just a bunch of noise, and ultimately, you will win because of that, even in spite of perfect information and a completely efficient market. And that's why I rail against that, where it's recognition of pattern, it's recognition of what's substance, what's not. I make a move and like, well, that doesn't do anything, but here's what really does something, right? Understanding the real impact. And so to be a bit of a geek about it, because I can't help my background, right? It's like, there is a formula, right? And you have to understand the coefficients to that, well, the variables to that formula, and then the value of each coefficient. And people get that it's different. People get it wrong, but the market ultimately figures that out and gets it right.
Yeah. So one of the things that I find interesting, and we'll talk about what's really going on in the marketplace today, but back in the day, value used to be the weight, let's say, of a British sterling pound. There was an atomic measurement.
Right.
And now it seems like value floats. What say you?
Well, I think that, by the way, I sort of laugh when people say, I'm a value investor. It's like, well, who is it, right? I'm trying to buy something that will be worth more in the future. I guess that's value, right? So however you want to look at that. I think that the difference is when you say value floats, ultimately, what is really valuable will, be resolved. And so, we're seeing, let's just say, we'll get to digital assets in a second. We're seeing some things that were sort of hyped up. And I talked earlier about, well, price is supply and demand. So if there's a limited supply and a big demand, well, we know what happens to price. But if that demand goes away, we know what happens to price. And we've had a lab that has showed us that in the last few months with, cryptocurrencies and things like that. But ultimately, things do resolve. And it's understanding, I think, both of these concepts, that there's lots of volatility in between, and ultimately things resolve if you do the right analysis, right? And
Yes.
and I find it interesting. So for instance, the most successful investor by far over the last 30 years was James Simons and Renaissance Technologies, which understood this, quite explicitly, right? So they had algorithms that understood that point to point is one thing, but all these things in between, if you capture that volatility correctly, you can do quite well. And they've done, astoundingly well because they understood how to do that. But that exemplifies for all of us, like when you're investing, you're either doing one or these two things, and we try to combine those. That's sort of I'll say the uniqueness of what we do at Arcadia is on, standing on the shoulders of giants, understanding, these are, and I love, let's say, George Soros, who I think comes in number 2 over the last 30 years, when he said, look, if you really want to take risk, great, but do it with profits. Don't ever risk your capital, make some money and then go play with it, go bet against the British pound and make $1 billion in a week. You can do that, but make sure you're doing it with capital that's profit, so that, you're never losing the farm, right? People don't understand that either. We've seen just the opposite. You read these articles where people, left their careers, mortgaged their homes and bet on cryptocurrencies. And you want to just go, what are you doing? Like, I don't, maybe that works out, but the downside is so great that, people kind of forget that analysis. And I could go on for a long time, Angelina.
Yeah, I think it was Michael Saylor who said one time, sell your house and buy more crypto or Bitcoin.
Yeah, and whatever Michael thinks, that's always a bad idea. And I'm going to say one point, like, when, I get pitched on venture deals all the time still. I have a long legacy in venture capital, and I really don't care what happens when things go well, because I know what happens when things go well. And everyone pitches you, if this works, look how much money we'll make. Yeah, and my response is, duh, right? Tell me the things that are going to go wrong. What can undermine this? How do you understand those risks? How will you manage those risks? What is kind of unforeseen, right? And, one of the interesting things, by the way, my father was an aeronautical engineer. One of the things that he talked about, actually NASA had the part of the NASA protocol. But one of the things, they called it the unknown knowns, which means you think you know something, you don't. And that is actually the biggest risk. And so when you're, any idea, any investment choice, it's like, what is it that you think you know that you don't? And if you're mortgaging your house, I'm just telling you, you don't know something that you think you know. And when the downside is so great, that is not worth the upside. No
Yeah.
matter, right?
Yeah, absolutely. There was a book called Pitbull, and it outlined the lessons of a day trader. And I think one of the things you're highlighting is walking in the footsteps of someone who's actually got skin in the game is very different than somebody who's looking from the outside regarding if you're handling other people's money. It becomes very real, like you just said. You want to know what's the downside, what could go wrong.
Right, right. And I think I want to tell, my message to people who are listening to this is if there is someone who's making a living by doing nothing other than telling you what you should be doing, don't pay any attention to them. So I'm going to insult people like Tony Robbins and Tim Ferriss and all of these people who I think are kind of clowns because they make a lot of money telling people what to do, but they don't do those things themselves. They make money doing things for other people, they claim. But unless you're doing it yourself, unless you're exemplary, like, I'd rather follow someone who does things and, they're an example for me, not someone who says, well, gee, imagine the life you want to lead and then go lead it. Oh, thank you for that advice. That's really helpful.
Well, it's a lot different when you're in the trenches day in, day out.
Right. And
yeah.
One of the things, we talked about this, I think, in the preamble where, success, whether however you want to define it, whether it's monetary or whatever, personal flexibility, other things, that is a side effect. That's a side effect to what you do. Right? And it's the substance of what you do, which is really led by, your values and character and your priorities and those things, because those generate outcomes. But if you focus on the outcome, right, you don't know what the inputs really are. And so people who give advice telling you like, here's how you'll make money. It's like, well, that's an outcome. There's something, I want to understand a process. I want to understand, the work, the analysis, the understanding that goes behind that. That's much more important.
Yes. So before I ask you about why Arcadia Capital is a unique opportunity, and of course you're going to be proud of your company, let's go to the the dark side first, which is there was a hedge fund that lost, what was it, 4 billion in a day, and another hedge fund that lost 10 billion in a day, something.
Right.
Yeah.
So, there are, once again, I think that there's this short-term thinking where people like, when the tide is rising, as Warren Buffett said, everybody kind of looks smart, right? So I'll name names, right? So Kathy Woods, who runs the ARC ETF, that investment strategy is just based on, well, there seems to be a groundswell of demand for these, we'll call them transformative businesses that have some kind of growth curve. But the prospect of them actually making money and ultimately being able to the substance of what's going on there, was shallow at best. And now that ended up losing tremendous amounts of money, right? So they did well for a short time, then they lost. Tiger Global, another example. Let's throw a lot of money when the tide is rising. Let's be out ahead and let's leverage ourselves, right? So let's borrow a lot of money, make a bet. If it goes our way, we look smart, but then it turns and we look really, really dumb, right? And so that gets back to my other point is, never put yourself in a position where you risk so much that if things don't go well, and believe me, they will not go well.
All
right?
the time.
You just don't know what's going to cause it, but it's going to happen, right?
Yeah.
No one could have predicted the war in Ukraine 18 months ago, right? So we didn't know this was going to happen, but something's going to happen. And if you're not prepared for that, not only to withstand it, but potentially profit from it, I think you're being foolish. And so like Melvin Capital, D1 Capital, that's another, I think that's one of the funds that just blew up. Melvin blew up. And these are guys that were, stomping the table saying how smart they were not too long ago. And like I said, when the market moves in your favor and you're highly leveraged and every little bit, you accelerate your returns, great, but that is not sustainable.
Yes. Yes. So one of the things I know that you like about digital assets is that they're traceable.
Right. And well, here's the thing that is, I don't want to confuse digital assets with cryptocurrency. Cryptocurrency is a sideshow to me. And
yes.
It's sort of like a little bit of it's noise and it gets a lot of attention, but it's ultimately nonsense to me, right? And so the substance of what I think is very interesting, and let's focus on asset management specifically, right? It's very disruptive for asset management because suddenly now every investment fund can have a liquid ownership. So I can invest in venture capital where I may not, for 5 to 10 years even, right? But if you want a piece of that digitally, you can trade that on an exchange. And so suddenly now investors have liquidity. I don't have to worry about redemptions. I don't have to worry about distributions. That really fundamentally changes the model. Oh, and by the way, the innovator here is Warren Buffett. By the way, I really laugh because an acquaintance of mine, Peter Thiel, gave a talk about how Warren Buffett was some sort of acerbic grandpa or something, whatever he called him, right? Something insulting. When the entire model they're espousing, Buffett implemented in the 1960s because he had public stock and he's an investment fund. So I don't have to make a redemption. I don't have to make a distribution. You can buy and sell your stock. I just make investments with my capital and grow my value. So it's a great structure. And now digital assets enable that much more easily for any investment firm. Arcadia has issued a digital token, and investors can now invest in that. It can be liquid. They can sell it the next day. Right? You can't do that with the traditional structure of an investment fund. So that's one thing where, in a very positive way, it's disruptive.
Yes. And I know that you've talked about being very proud to be a disruptor in the asset management world. What are some of the other benefits? I think that I just want to highlight this for a moment, that you can be an issuer with greater transparency, automating all securities, clearing, settling, and compliance.
Right.
Yeah. So I think one of the things that drives investors crazy is the fees.
Right.
In the daisy chain.
Right. It becomes, the complexity, and sometimes it's almost impenetrable to see, well, what do I actually own, and how do I ever get it, right? And that's a real challenge. And so there's really two ways to think about this. One is, I'll call it form and substance, right? So, but substance is, if you're going to be a business, and let's just back up for a second, if you're going to be a business, to say, well, I'm going to do what everybody else does, but I'll just be a little bit better. That's not a business plan that makes any sense, because maybe you can do that better, but probably not. And why would I care? But if you're going to do something, nobody does this, so I'm going to do that. So if I just do it well, I'll have a real substantial competitive advantage, right? And by the way, and that's the game plan from James Simons. Renaissance Technologies. He literally said, I can't do what these other guys are doing, but if I just do this and don't screw it up, I'll be fine. And turns out he was more than fine. But that's a way to think about a business. How do I really strategically position myself, and how do I manage risk to make sure that I'm a sustainable company, right? And I've talked about this. There's a big difference between someone who invests and an investment company. An investment company says, I'm going to be here in 20 years. I'm going to have a legacy to pass on to other employees. I've got people, families, other people that are involved in this, and this is much bigger than me. And the only way to do that is to manage that. Now, the form, and what enables this, and what I think is disruptive, is now, any investor from anywhere can access this opportunity, or any opportunity, on a digital platform. And so that enables people that just don't have infrastructure for investing. So, if you're sitting in Topeka, Kansas, and you say, yeah, I'd like to invest in a hedge fund, like, good luck. How are you going to do that, right? But now you can, right? You can buy a digital token, and it's verifiable. And that's the one thing, we'll digress a second. The one thing that Bitcoin and these cryptocurrencies have proven is that you can digitally record something. You can, it's transferable. It can be settled. It works, right? So that's great that the technology works. So now you can apply the technology to something that's real, right? So, Bitcoin is just a bunch of people thinking there's something valuable when there's nothing underlying it. But if you're an investment fund, well, we own assets. Here you go. We own, the building behind me. We own that building. Right? So, there you go. You got a piece of that building now, right? So there's something that's verifiable. And so liquidity and verification and transferability, that makes things, very disruptive.
Yes. So let's continue to talk about illusions for a moment.
Right.
So I'm always talking about the moat, or the moat around your castle, in preparation that someone can never have enough education and inspiration to proactively create that moat or moot. Okay. So where do you think things are headed in the global economies? And what are your thoughts about that moot?
Okay. So a simple question, where's the global economy going, right? Well, let's first talk about, the second part of that question, which is, there is, a couple of things that are converging that make things very interesting and more impactful. One is, I'll call it lifelong learning. We know, that's a term that's been used a lot, but right now, one thing about an education, people think that it's given, like you have to go to a university, you have to go somewhere and someone gives you something. That's not what an education is. An education is something you take right? So what do you want to learn? You want to learn, computer science? A guy named David Malman at Harvard has his class online. He's the best computer science professor in the world. You can take his class right now at no cost, right? So you can get a lot of information, a lot of very useful tools. And I think that spirals up. And I think there's something very exponential about that, almost on a global basis. And when you look at how competitive, the academic world has become because we've opened up to global students, how competitive, Silicon Valley, where I sort of live, where that's become so competitive because we've opened up to the whole world. And this kind of transfers to the other question, where's the world going? Where's the global economy going? So people like Larry Fink and I think even Ray Dalio have said, well, maybe globalization is dead, or, there's a big impact there. I don't buy that. And the reason I don't buy that is the world is global now on a grand scale. Obviously, there's disruption in what's going on in Ukraine, and there's disruption because of the pandemic and all of those things. But that does not change the fact that comparative advantage exists. And one of the things I talk about is in the 1990s, I was doing business in China when it was really a frontier, right? And there were just people getting together who realized there was a way that we could help each other and build value. And no government was involved. There was no, policy. There was no nothing, right? It was just people figuring out a good way to do things, which is what the market really is. And so now you have governments who figured out, wait a minute, there's a lot of things going on. We should get in the way, right? And so you have people trying to create friction for all of that. And now all of a sudden we're going to have a war with China somehow, right? Which is crazy. But by the way, people do stupid and crazy things. Look at Ukraine, right? So I'm not going to dismiss that as something that
fear plays into the market. Yes.
Yeah. But I do think that the world will remain global, will become even more global, and we will be able to benefit each other. There's billions of people who are looking to join the global economy. That's not going to stop. And I am more optimistic about where we're going. And I think it's still an international economy that matters more.
Yes. And you, with Arcadia Capital, you've looked at historical patterns in leveraging artificial intelligence and algorithms.
Right.
So it's very interesting because back in the day, there would be guys trading on the stockroom floor.
Right.
And now it's computers. And I know that you've said you're a scientist and an academic at heart.
Right. Right.
Yeah.
Interesting. I'm going to just one quick, so my first artificial intelligence program I wrote in 1980 in a language called Lisp, right? LISP, right? Layered Instructional Software Program, I think is what it stood for. But at the time, we all said, this is just theoretical because we'll never have the processing power and we'll never have the data to actually have useful output. Well, look what happened. We have the processing power and we have the data, right? But now, making sense of that, the thing to really understand is that it's dynamic in nature, right? It's changing all the time. So understanding, and let's go back to my example of the formula, right? There are variables that are being identified and changing. There are coefficients of those variables that are changing. It's a dynamic environment. So getting good data, is very important. And then understanding, well, what really matters. And now I'll just digress for a second. So my thesis at MIT, I said, you look at all these factors, and they could be 20 or 30 factors. And I'm like, what is influential versus what makes a difference? And my whole thesis was focus on only those things that make a difference. And it turns out to be no more than 3 factors, right? And the example I used when I wrote my thesis, like, well, you could invent the wheel, but do you really care if it's green or blue, right? That may be influential, but it's not a difference, right? And so focus on the things that make a difference. And so I think that, what we try to do is do a lot of scientific analysis and research with, a lot of data, and really trying to, sift through, well, what really matters, what really makes a difference, and ignore all these other things. And I just don't think a 17-factor formula that gives you an investment recommendation is all that useful.
Yes.
Because, right,
yes.
Now figure out what really matters. Right?
So if, let's say, human emotions are not standardized, what is your opinion about centralized versus decentralized platforms? And do you think the central banks will end up buying Arcadia?
Well, the interesting thing here is the way that all business development works is it always starts out fractionalized and decentralized, and then it always centralizes. I mean, always. So we could start with 1,000 automobile companies in 1915. There were 3 in 1955 in the United States, right? And so everything centralizes. And you look at the internet. So I remember I was teaching at UCLA, and we were looking at this is in the 1990s. We're looking at innovation that's developing and happening, and look at all these thousands of opportunities. And we all talked about the democratization of society because of this. Guess what? It all gets synthesized and centralized, and we have Google and Amazon and Facebook. And that's the way the world just works, right? And so you will always have to deal with centralization, because that's the way economies naturally develop. That's the way business economics naturally develop. The best example maybe, or the clearest one, is, let's say, something like eBay. No one goes to the second most popular auction site, right? No one goes to the second most effective search engine, right? No one goes to the second most traveled social media, if traveled is the right word, but right. So there is a natural, almost mini monopoly to these businesses, and and that's one of the things where innovation can create new opportunity, but you see this overall centralization that occurs.
Yes. So before I ask you about your legacy, what are you the most proud of regarding Arcadia Capital?
Oh, well, pride before the fall. So be very careful with something that you're proud of, right? And
Okay.
so I'm going to use a different word, right?
Okay.
This is my Greek side coming out, right?
Okay.
It's I think actually the thing to be most proud of is how you handle adversity.
That's a
And
tweetable moment there. Keep going.
well, adversity is something that will strike us all, sometimes in a big way. And adversity has struck me in a big way, right? I've had to deal with some very challenging personal issues, and even within a business, you suffer from very adverse consequences sometimes that you didn't see coming. As much as I sort of talked about all the preparation, all those things, sometimes, as Kurt Vonnegut says, the thing you're really worried about is not the thing that's going to happen. It's the thing that's going to happen on an odd Tuesday when you weren't looking, right? But then it's like, well, how do you handle that? Right. And actually I had a thesis advisor at Harvard who talked about, the hero's journey, right? Like the superhero is not the guy that's just bigger, stronger than everyone else. It's the man or woman who can recover from knowing that it's their very own traits that led to this disastrous situation. And it's those very same traits that have to get them out of it.
Well,
Right?
it's interesting. A lot of people have a hard time looking at themselves.
Very much so.
Yeah.
And sometimes it's not until you're punched across the face that you realize what you were doing wrong, right?
Yeah. The breakdown that leads to the breakthrough. Yeah.
Well, and there are times, and again, I'm speaking from personal experience where I thought, well, things are going really well, and all of a sudden, boom, right?
Yeah.
And then how do you handle it? And it's not easy, and this is where I sort of really push against people who say, oh, just pick yourself up and get going. It's almost, you want to say, F you, right?
Yeah.
It's much more than that. But I think the thing to be proud of in an organization is, you mentioned it earlier, we are people. Each person, they've got families, they've got personal issues, they've got things that happen, right? And you have to work together. You're trying to accomplish something. Bad things are going to happen. There'll be days when you're yelling, screaming, cursing each other, cursing the world, doing all those things. And you wonder about, you have clients, you have partners, you have people you're trying to serve and do well. And it can be very troubling, right? But then how to handle that, and how to be, to Rudyard Kipling, right? How to keep your head about you, right?
Oh, yeah. 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 Rudyard Kipling.
Right.
If.
Yes.
Yeah. My dad made me memorize that poem. Keep going.
I think every father gives it to his or her child, right? And so I think it's true here that you have to, you will face adversity. And I think that, and by the way, pride will probably be the single greatest cause of that adversity, right? Because you think things are just fine and I'm just great and things are, well, yeah, really. And so the thing to be proud of is how to handle adversity.
Yeah, I just want to go back for a moment to that book I mentioned, Pitbull, the Insights of a Day Trader. He was so happy, maybe I'll use the word proud even, to be managing other people's money until they were calling him at all hours of the day and night and weekend. And then he got out of the business. But that's another story for another day after all of his artwork that he collected.
Well, yeah, one of the things that we actually have a fairly refined filter as to who we will work with.
Yeah, I don't think he knew that going in. I don't
Right.
think he had the mentors around him.
And again, these are hard earned lessons, that I'm sharing. It's like, well, again, after getting punched around a little bit, you're like, I only want to do business with people that, share my people as partners. And I'm happy to report they become friends, which, is because you're expecting a long-term relationship. And that's what we're really, in business for, for me, it's a long-term relationship. And And it's funny, when you look at someone like Warren Buffett and his partner Charlie Munger, right? Okay, they're in their 90s and working away because they happen to love what they do. I happen to love what I do. I can't imagine like retiring. I don't have a point saying, okay, I'll work for 10 more years and then go to an island, right? That doesn't interest me. But what I do and the people I work with and the intellectual challenge, right? I think honestly, Angelina, the idea every day to walk in and go, well, what's really going on? Right. I mean, you see a lot of stuff. I can look over here. I've got a screen that's, green or red, depending, right? And you're like, well, what's going on? Why is that company worth 40% less today than it was yesterday? How can that be, right? So there's no logic. That gets back to, human emotions that guide that. But, we really want to understand. And I love that puzzle, right? Well, what's really happening? And as things and technology will create more innovation, more things happening. And that's exciting. It's exciting to be part of that.
Yes. So one of the things you've also asked is the question of what are my competitors' best decisions? And I think my question to you is, if I circle back to your company, what do you think has been the best decision of Arcadia Capital?
Yeah, it's by the way, the context of that is like, again, I go back to my chess analogy, which is you always think about, well, what's my competitor's best move, and assume that they make their best move. When you assume the other side is going to be naive or make a mistake, bad strategy. They may, but that's not a strategy, and that's not something to count on. So assume, their best moves. I think, first and foremost, our best move is my team. I've got a couple of partners and other people that we work with and affiliates and investors, and I view them all as, and that's our best move.
Your team.
It's the team. At the end of the day, people do things, right? It's like, so, and, when you're dealing with a company or, you and I dealing, it's a person dealing with a person, and, it's people that do things. And so you have to have the right people. First and foremost, every successful company, everyone, the distinction is they've got a great team of people. And then that permeates the organization, right? So that's the thing that I think makes all the difference, picking the right people. And sometimes we've had the wrong people. One person that was, with a stellar resume and, can be very charming and all of that stuff, and it just wasn't a good fit. Right. I've got more negative things to say, which I'll say offline, but they'll just say it wasn't a good fit. Right. So
yeah,
you have to work with that. And it's things like ego and pride and other things which really do get in the way. Right. And I go back to one of those original comments I made, like creativity is the key. Good ideas come from anywhere. Understanding that and respecting that is more of a key to success than not.
Yes. Yes. Well, it's fascinating because I think that those honest conversations are vital, but honest conversations don't always happen until you either get enough rapport or enough time where you kind of peel off the mask.
Yeah, I think it's interesting. We talk about that, like, like think of your best friend, and I'm lucky. I have some great friends, and we literally say anything to each other that might be offensive to anyone else. But but you want to hear that, right? And I mean, I've had one of my closest friends who not too long ago, he came to me and said, Nick, I think you're deluded by doing that. And this is a guy who's been a friend for 40 years. I mean, I just love him dearly. And he can say that. And I really appreciate that input, right?
Tell me how you really feel.
Yeah, tell me how you really feel, right? And, but setting up an environment of honesty where, and I like, Ray Dalio he's got some structure that I think is a little bit too onerous, but he, has that one principle, which is never say anything about anyone that you wouldn't say to their face. And if you're saying something like, gee, I think Angelina is a little weak on this, you go talk to Angelina right now and tell her, Angelina, I think you're weak on this. And because, and I know that Steve Jobs gets a lot of bad publicity for being, let's just say, less than polite in many situations. But, my friends who worked for him, they said one thing that underlined everything was we knew he was out for our best interest. Like that work is not good enough and it's going to impact you and your career. And if you want to be successful, you've got to do a better job. There may be a better way to say that, right? And I don't advocate being, impolite, but there are polite ways to say that, and you really want to help someone. I mean, I think the idea, and if there's anything that I sort of try to think about myself is, I'm a teacher first and foremost, and I want to pass on knowledge. I think we all have an obligation to pass on our knowledge. Now, this is a bit of a digression, so bear with me, right? Somebody asked me, can we change the world? And so here's my answer. Don't try to change the world because you can't, okay? But what you can do is be a better person and then enable all the people around you to be better, teach, share knowledge. And guess what? If you do that, you ultimately change the world, right? That's what, the things you can really do. right? And I don't want to get, too much editorial here, but, swinging a banner once in a while doesn't do anything for anyone, right? You actually have to do things. And so I'm sort of a big believer in that. And again, that's another podcast entirely.
Yeah. Well,
but we want to be able to,
there's a skill in doing and taking the massive actions in and of itself. Like you had said before, like when the pundits are doing the game show and telling you things, it's a whole other skill set when you're actually in it to know the nuances of, oh,
right.
maybe I shouldn't go there or step on that or make that investment, or this is what happens.
Right.
Yeah.
And one of the, honestly, one of the advantages that I have, like, so in my MIT program, I actually had to program a cryptocurrency, an original cryptocurrency. So I really know how it works, right? And there's a great advantage to that, because when I hear this stuff that goes on, I'm like, yeah, that doesn't do that. It doesn't work like that. I know how it works, because I spent, months where it didn't work, right? And I, kind of figured it all out. And so that, and that's a challenge. But I do think that some of these things, require, deep knowledge and understanding. And that doesn't mean you have to do it all yourself, but this is where the sharing of knowledge really comes into play, where I can talk to my partners like, okay, here's what we can do. We can't do this because that doesn't work. I don't care what you're reading. That doesn't happen, right? So that can be very valuable.
Wonderful. So since this is the Legacy podcast, how do you define the word legacy?
Well, thank you. I get, maybe you can infer from some of the things I've said that, legacy is not a thing, right? I mean, I think people, they talk about, an achievement. I want this NBA championship to be my legacy, which happened last night for the San Francisco team, which we're all kind of happy about here. But that's not a legacy, right? I think the legacy is a set of values and character and things that you pass on, right? The legacy that I want to pass on, to my family is to a couple things. I think one is, courage to stand for what you believe in and to pursue that. And, courage takes on many forms. And I think in my life, there were times when I didn't display the courage that I should have. And so, I've learned that lesson, and to say, there are, again, my father was a Greek, so a Spartan warrior, don't drop your sword, right? And, Aristotle said, speak the truth regardless of consequences. Try doing that, really, right? That is not easy, but, these are the kinds of legacies where these are aspirations, right? There's no specific outcome, there's no specific thing, but it's an aspiration, learn.
It's good to have a vision, yes.
Have a vision where you want to be in your life. Remember that you will impact people. How do you want to impact people? What will you choose not to do? You will have regrets. Choose your regrets, right? And and choose the accomplishments that matter most. What are the things that are really important? And we talk about. I'll share. My mother and father were married 60 years, and I remember kind of at the end of my father's life, they sort of said, isn't this worth it? This is, all the things that go into that, it can't be understated, right? But you think about, and it's worth it, right? So start there. It's like, what's really going to be worth it to you, right? And then that's a thing that really matters. And I think about a legacy is passing on these kinds of values, knowing that, they're not necessarily attainable. You can't check a list, and they're all aspirational, right?
Maybe it's a consciousness and awareness.
I think so. Just like a good marriage is a dynamic thing, right? Every day, right? You're trying to build a relationship and trying to make it work. And that's a great legacy, but that's a legacy of dynamism and, having courage, pursuing education, helping others, thinking of others, teaching. These are all what I consider more valuable legacies than, look at the house on the hill. That was mine, right? Okay, fine. But that ultimately becomes meaningless to me.
Yes. In addition to your parents, who were some positive role models?
My high school math teacher. Ooh. Maybe the most valuable person probably in our country are high school math teachers, and because I don't think there's a single successful person who can't point to one man or woman that really inspired them. And in my case, I had a teacher, and what he did was he taught me computer science when I was in 9th grade. And then it was a small high school, so he was my math and computer science teacher for 4 years. And
in New York.
Is in New York, right? Okay. And a small Catholic all-boy high school, which there's a lot of negatives to that. This was the positive. And this guy set me on a path and taught me more than I probably learned in any other program I've ever been in, right? So
yeah, he inspired you.
Right, definitely. And I had a baseball coach who was, just as inspirational, because it's the same thing. It's like, well, stuff happens, right? And that same, he had no tolerance for, like, after you struck out, if you like threw your bat or did something, it's like, that's like, what's wrong with you? And it's a little bit like the John Wooden story, which, like, if you can leave that batter's box knowing that you gave it your best, maybe you missed, maybe it was a great pitch, maybe whatever, but you gave it your best, right? That's all that mattered. And those two people, they really said, my math teacher, one of the things he said is, grades are somebody else's standards. What's your standard?
Oh, that's deep.
Right.
Yeah.
You should work to your standards. That's all that matters. Right. Somebody gives you an A for that, fine. But you could have done better. You got a 96, you should have gotten a 99. Keep working at it. I mean, he really did that to me, by the way.
Oh, that's lovely. I think that those ordinary moments can stay with someone for the rest of their lives.
Yeah.
Because they're embodying it, they're living it, and they're taking the time to talk to you.
Well, Angelina, you made a very important point, which I want to go back to, which is, we don't understand that we can be impactful on people's lives with just small interactions. And there are, I know you can think of these, I can think of these minor interactions that person may never even remember. And yet they've been impactful. I actually had somebody that I met actually in China in 1995, who just recently said, when you said this to me, I had a real, and I just didn't remember it at all, but, and it's sort of like in highlights. Well, you impact more than you realize, and you're impacted by so much if you take the time to observe it. And I think that's a very valuable insight as well.
Any closing thoughts about legacy or Arcadia Capital?
Well, by the way, I think that we always hope we are more than the sum of our parts. So maybe a legacy is not a list of things that you either did or didn't do. And, in my case, there's a list of good and bad. And, and I happily accept, yes, all those are good and bad, but that's not who I am, right? Take the best thing I ever did. That's not who I am. The worst thing I ever did, same thing, right? And you're hoping you're much more than that, because you always, you can always become more. And I think as a legacy, if I could, pass this on to the next few generations in my family, is to say, you can always be more, right? There's no such thing as an achievement, right? And, going back to Kipling, right? To paraphrase, success and failure each are imposters.
And to greet them the same.
Right. Yeah.
Yeah.
Only when you stop, you failed, right? But until then, you just keep going, right? And so again, you can always be more. That's maybe the hopeful legacy. And, you're kind of hoping that, 30 years from now, I'm doing much more than I'm doing now, or being more impactful, or, all those things. I think that's really the kind of the punchline to me, is we're more than the sum of our parts. We always will be. And we can always be more, always be better.
Lovely. That's lovely. Thank you. And thank you for also sharing your values, whether it's courage or the growth mindset, or always pushing yourself to develop and define your own standard, in addition to accepting feedback from the outside.
Well, thank you very much, Angelina. I've enjoyed this experience very much. Thank you for the interview.
Thank you. Thank you so much. And what's the best way if a viewer or a listener would like to reach you or your company?
Oh, well, we do actually have a website. Hard to believe. Right? ArcadiaCapitalGroup.com. So ArcadiaCapitalGroup.com. It has our contact information, email, phone numbers, things like that. The stuff that'll get you to this little office in the back here. So yeah, that's the best way to reach us, I think.
Lovely. Okay. Well, I just want to highlight again that I appreciate that you have spoken into how much we can gain from our values to develop the sense of our legacy. Okay. Okay. So I'm just going to read out my closing paragraph, and okay, so in closing, I hope to dive deep into subjects that can help a person define, develop, and execute their legacy, and continue to scour the landscape for those who can be great resources to every dimension of your legacy. For many listeners, there can never be enough education and preparation. Whether you find yourself in new wealth or generational wealth, may the content of this channel be an anchor in any storms ahead. We do our best to provide original content for your intellectual and emotional curiosity. Thank you so much for joining us today. And if you're watching on YouTube, please like and subscribe. Or if you're listening on Apple Podcasts, please rate and review. So thank you so much for joining today. And thank you so much, Nicholas, for being a guest speaker.
My pleasure, Angelina. Thank you for your time.